So recently, RBI has released a financial stability report which states how the banking sector has been performing over the past few years, and specifically the current and past preceding years. And it has also shown that how the country has been doing in its different economic parameters. So I will be highlighting the whole financial stability report in 4 points based on the deposit, credit growth, gross non-performing asset, and the final statement comment made by the RBI for the Indian banking sector. First, I will be starting with the deposit growth rate. So now talking about the deposit growth rate, the Indian banking sector has seen 11.8% of deposit growth rate, which is a very good number. And the majority of deposit was coming in term deposit, that is the fixed deposit. And the reason why we could easily understand the reason of high deposit growth rate in terms of term deposit was due to the high interest rates which was being offered in term deposit. Just for information, term deposit is also known as fixed deposit, and usually the interest rates are high in term deposit and fixed deposit as compared to savings account and current account. So why there was a increase in term deposit rates and fixed deposit rates? So eventually there was a rise in the term deposit rates and the fixed deposit rates due to the increase in the repo rate. Now the repo rate was increased by the RBI to basically combat and tackle the high inflation rate which was increasing for the past 2 years in India and even at the global level. So due to this, there is an increase in fixed deposit rates and even in the term deposit rates. And due to this, the people and the citizens and the customers of the banks have started to deposit their money in term deposit and fixed deposit. This was one of the reasons why Indian banking sector saw 11.8% growth rate of deposit. So second, we will be talking about the credit growth rate. So the Indian banking sector has seen a credit growth rate of around 15 to 16%, which is a very good number for any economy, keeping in mind in various things which I will be discussing in a few minutes. So 15 to 16% growth rate in loan is a very positive segment for the Indian banking sector because it shows that the people, the institutions, the companies and citizens are taking loan for various segments and for their own needs, which shows economic confidence in the environment. Now talking about the growth rate, why we actually saw this growth rate. So basically the growth rate was due to the economic expansion, the policies which was mentioned by the government in the current years and even in the previous financial year and the budget, which was one of the reasons why we saw a very proper loan demand in all over the country. But the major loan demand which was coming and distributed by the banking sector was to the retail segment and not to the corporate segment. So by summarizing the whole point, that is the 15 to 16% growth rate which came in the banking sector in terms of loan was majorly driven by the retail and not by the corporate. Now the third point is regarding the non-performing asset. Basically these are the loans which were given to the customers or to the corporates and it couldn't be recovered. So as in my previous point, I have discussed that the loans were being given to various institutions, to corporates, to retail investors, to retail, sorry. So basically there is some sort of default. Default can be in terms of principal, interest or both, and sometimes there can be a delay in it. So due to this, these account or these funds or these loans are termed in non-performing asset. So the gross non-performing asset for the Indian banking sector came down to 3.9%, and that is the net, and the net non-performing asset came close to 1%. Now I still remember a time in 2018 or 17 or maybe 2018 specifically, where we saw a gross non-performing of 10%. Like, do you know what does that actually mean? Every 100 rupees being lent to the economy, only rupees 90 is being recovered. Now that is a very dangerous number if we talk about any banking sector and even for any economy, because this results a higher default. So as this gross non-performing asset is down in number, it shows that the banking sector health is very good, and it also shows that the creditors and the person who are taking the loans are in a very positive growth rate. And now last I will be speaking about the final point, which was the RBI making remarks on the Indian banking sector. This I will be categorizing in one line and in 2 points. So the first one will be regarding the adequate capital. So the RBI has mentioned that even in international and domestic market, even if there is any scenario which can cause a trouble in the economy, the banking sector of Indian system has adequate capital so that it can manage any sort of buffer. And the second one is with respect to liquidity. So even in one of my previous video, I have discussed about how the 2000 rupees note ban has positively impacted the banking sectors, and eventually The RBI has also mentioned in its report that the banking liquidity is in a very positive and at a very stable stage. So now I'll be discussing about the last and final point which was made by the RBI regarding the Indian banking sector. So basically RBI made actually many comments regarding the Indian banking sector. So these were the two statements which was given with respect to capital and liquidity. So the RBI has mentioned that even in international market or even in domestic market, there are some scenarios which can be like negative for the market. But even in that case, the Indian banking sectors have adequate capital to defend themselves, which is a very positive statement. And the second statement was given with respect to liquidity, which shows that the banking sector has a positive and a stable liquidity and it doesn't face any liquidity crunch in coming years. So this is the summary of the Financial Stability Report which was released few weeks ago. Thank you.